Okay, here's our update on precious metals. We'll look at gold, GDX, and then we'll look at silver. We'll focus most of our time on silver. That's definitely the most bullish of those three components, which you usually want to see silver sort of leading gold. But at this point, you definitely want to see more upside from gold. So let's start with the daily chart. As I always mention, take a look at the links in the description. So you'll see, the previous precious metals video from a couple days ago, give you some context. Follow up because I follow up on some themes. You'll also see Cycles 101 content. I know it could seem a little confusing for people. Daily cycle high, daily cycle low, etc. That's all explained extensively in the video. Again, take a look at the links. There's also some written content there, and I also post my sort of silver, just sort of more comprehensive written report on the different past weekly cycles since the top in 2020. So do take a look at that stuff. And again, silver seems to be massively outperforming here, but we'll start with gold. We just opened, it's September 12th, about 9:30 p.m. We just opened the candle a few hours ago. This starts trading around 6 o'clock. And I'll remind, this is the gold CFDs, so not the future, so the numbers will be different. And again, this is just like we're just kind of crawling along the bottom here a little bit. And we did just cross over the 10-period moving average. It is very clearly a new daily cycle. Just a lot of... so we've rallied a total of 2.7% from the bottom. That's it. Like that's important to know about, right? So that's your daily chart. So all that to say, we've wasted a lot of time in a daily cycle, and we've only gone up 2.7%. That's not good. The other thing that's concerning is this weekly chart just looks atrocious. Now, forget the count, which looks bad. This count suggests we had a top on week 3, and this is week 8. But regardless of the count, we're beneath this pretty bad swing high. And this is actually your second week that we're consolidating inside the range of this down week. This was the week of August 29th. I'll zoom in to see this. And again, I think this is where it's really important. This allows you to not get caught up in the emotions and focus on the levels. Notice that this down candle from the week of 29th of August, what is that? Of August 29th. So that has a high there and a low there. And notice all the price action in the last several weeks have just been inside that range. That's why you have that grindy action on the daily chart, right? Again, that daily, these 2 weeks of consolidation are these just like this slow grind up, that 2.7%, the nothingness, the nothing burger. That could change violently. We know we have the CPI print tomorrow morning at 8:30, Tuesday morning, September 13th. That's going to be important. And of course, we have the Fed meeting next week on the 21st. Right now, gold is just not looking great, and we're on month 81. It is green so far. We have made a low, and so I talk about this all the time. Right now, at face value, since we made a low below the last candle's low, and we've now gone green, if we continue to see bullish follow through, we're going to come out the other side, right? We're going to make a high above this candle. That's a big if, though. I said if we continue to see bullish follow through. Doesn't mean we will. This is a pretty reliable pattern. It certainly does not play out 100% of the time, or even like 90% of the time. If anything, you need to get to a certain level to feel pretty confident. That's a rule that a really good sort of Twitter and YouTuber, Sarah Strat Sniper. It's also a strat concept, the outside candle. So I would definitely look into that methodology. It's useful. Here I'm obviously focused on trend plus cycles a little bit more, but that is an important concept. We're potentially going to create a bullish outside bar or a candle, same diff. The last time that happened on a monthly chart, I'm just trying to look here. That hasn't happened. That hasn't happened for literally years. We haven't had a bullish outside candle. This was a bearish outside candle, right? Notice we made a new high above this high, and then we went red, and then we did complete the pattern. So if we did get a bullish outside candle, that would definitely be strong evidence that we have a major low here. Well, we obviously have quite a bit of a decent amount of month left, so let's see if that pattern plays out. And then we'll look at GDX, and as I said, we'll look more closely at silver. So GDX is on day 6, and you can see GDX is definitely outperforming gold, which is what we usually like to see. So GDX has run about 12% so far, which is promising. This is definitely not a good looking candle. This red candle on an up day, this is setting up for a swing high. And we also have a gap. We know those tend to get filled. So I wouldn't be surprised if we see some gap filly action. That could be a good potential reaccumulation point. And also notice that we still have this gap here that remains unfilled. So we might see a move all the way back here, right? Like that would still be well within sort of healthy uptrend. So, and I think that's the other thing to focus on here. We now have an uptrend on the daily chart. I'll actually remove these lines because I think that might make it a little harder to see. This is just really important, and this is how, again, as I said, you separate the emotion from like the levels, the trend analysis, right? So that's your high or low, because that low is higher than this low, right? Now we've come up. We've had a real extension. We had a gap and then another gap, right? So now maybe we make another move higher. Either way, we're going to expect some kind of pullback. We'll want to hold above here at the very least. So you could definitely see we fill those gaps, and then we resume higher. Again, that would be what you'd want to see if you're long. That's what we would expect if this uptrend continues. Now, that said, if we look at the weekly chart, because Monday was your first day, your only day really trading, you are red on the week. So again, we're going to need to see this reverse to continue that upside, and the gap does exist on the weekly chart because the gap happened on Monday. That we are like flirting with the 10-week moving average, and notice we have literally not even, like, we haven't even touched it in essentially since that big down candle on April 18th, or the week of April 18th, I should say. So if this week can manage to close above it, that'll really suggest, this is it's pretty much certain that this is week 2. That was your week 31 ICL. And so now that is a real character change. Again, haven't been above that 10-period moving average basically since the middle of April. And if we look at the monthly, this is a nice visual here, right? So this candle is doing what the gold candle may do later this month if we see bullish follow through. I mean, look at this. It's also called a bullish engulfing candle. We're making a move to 2764, and I believe I mentioned this in the previous video. Doesn't mean we get there, but that is where we are headed unless we get a bearish reversal, which could happen. Now, knowing that we're on week 6 or day 6, that's the other thing to kind of keep in mind. Even if we're going to get a left translated daily cycle, we could still rally for another several days, right? And I talked about this in the weekly report about SPX, which is very much correlated with everything now. We're probably going to, like, that Fed meeting on the 21st is going to be an important pivot point. For the S&P, it'll be day 13. And let's see, for GDX, what day will that be? This is how we kind of scenario plan, right? So today's day 6, and if we go right, so right, because GDX is on the same count as the S&P 500, so it'll be trading day 13 when we get the Fed meeting, and so that's your cue. That's your clue that maybe we're gonna do something like run up into that meeting, and then that creates your swing high. And that's like your daily cycle decline. That would be the bearish scenario, right? Because if we're going to get a left translated cycle, it's got to top by week 13 or even earlier, right? And of course, gold is already on, day 13. We're talking about the daily cycle here. So this is something we could see play out, right? We run up into the Fed meeting. And this could be a pattern that we see for the S&P as well. I'm not saying this is what will happen. This is something that we need to be ready to position for if we see it unfolding on a time frame. And tomorrow, obviously, we know we have the CPI. Assuming we make it out of there bullish, which is what the market seems to be leaning into. And again, that's an important concept. Because of where we are in the daily cycle, that tells you the odds suggest, and the price action suggests, and Bob Lucas mentioned this on Twitter, I think it was a very astute point, that, we'll probably make it out of this okay, go on to make higher highs. Again, even if it's a left translated cycle, you might not get the top until day around 13, which happens to be the FOMC meeting, very coincidental. So again, I think this is a very poignant example of a very likely bullish outside monthly candle that's going to play out. Especially when you think about the range for last month was, the high was 27.58 and the low was 23.80. So about $4, right? Give or take. And so once we've gone $2 from the low, which would be, what is that, 25.80. So we're not quite there yet, but we're getting close. That's a thing that, the Sarah Strat Sniper calls the 50% rule. Again, I think it's a really good way to quantify when a bullish outside candle is likely to complete its journey, right? And so that is GDX. And finally, we'll look at silver. So silver is the one that is really exciting. That's the one that's got people's hearts on fire, and that it makes sense. I get it. So we're starting day 8 here. We're obviously red here, and again, I want to call out, this is important. You've got to get more excited about the pullback than you do about the rally. What do I mean by that? It means a pullback has to hold higher lows for an uptrend to continue. And so when you get a pullback, that's exciting because you want to see if it holds higher lows so that you can continue to stay long the trend if you're not, or potentially use that as an entry point, right? And so this is your daily chart. I mean, look at this behemoth of a candle, almost 6% up today. And again, this is silver CFDs here, so different levels in the futures. We are trading. So far, it's just an inside day. That's important. These levels are important to kind of get a sense of. That is the range of this candle. And so far, we are like well within that range, right? So between 20 and 1880. Now, that means we could see a big percentage decline and still remain an inside day. That's why you look at the lower time frames to understand kind of what's happening inside these candles almost. But that gives you a good sort of frame of reference. So right now, all we have is consolidation, right? And it's still at the higher end of the range, nothing to be concerned about. With a big move like this, you're going to need a higher low. And so that might be what's forming. We'll have to see. On the weekly, we got some great follow through. So this is week 2 of the new weekly cycle. Again, we're getting that big pullback. That's what we're seeing today. I mean, quote unquote, big pullback. Because we had a big rally, it means the retracement can be relatively big and still remain healthy. So far, it's healthy, but we're going to see what those levels are that we want to watch. So that's week 2. And then if we look at the monthly, same idea as GDX. We are crawling up this candle's range, right? And I mentioned this on Twitter. So we're at 2089, 2090, call it, is the high from last month. And we are on a path to that number. Again, we would need a bearish reversal to turn us away. That could come with the CPI number tomorrow, for instance. We could be getting that literally right now, right? Maybe this isn't going to print a higher low, it's going to print a lower low. We'll have to see, right? We're going to have to see how the price action turns out. But so far, I mean, that's a kind of a pattern, right? Both GDX and silver are well on their way to making that outside bullish candle. Gold is still kind of that's your sort of canary in the coal mine a little bit, though. But if we're going to get a reversal, we'll see pretty clear signs of it. The other on lower time frames, and we'll get to that just in a second. The other thing is you can see this 10-period moving average sloping lower, and we kind of fell away from it, like officially in May, just kind of You know, we dumped through it in April, right? Monthly candle, and then we just fell away in May, June, July, August. Remember when we talked about how we hadn't touched the 10-week moving average? So it makes sense. We also haven't touched the 10-month moving average since around that same time, that mid-April, where we kind of sliced through it, and then it was just kind of sort of Rap City. And so this, if it does form a bullish outside candle, would be a very powerful signal. Doesn't mean it's the bottom, right? Like you can see this was almost a bullish outside candle, so same kind of principle. And then we had this follow through the next month that got wiped out, and then we started another big leg lower. This ended up being the end of the consolidation and the big dump. And so you got to be cautious. But right now, and we'll go to those lower time frames. Let's go to the 8-hour chart for a second. So this is important. Right now on the 8-hour chart for silver, we are attempting to print a bearish swing high. Let's unpack that a little bit. So before we get to that, let's talk about the low and how that presents itself on the 8-hour chart. I'm using the 8-hour chart, and I'll zoom in even to the hourly to give you a sense. Again, these are all fractals. They all work on all the time frames, right? And so this is where you had your low. Next candle actually made a higher high, did not make a new low. I'll zoom in again so we can see this. And then we continue to make a series of higher highs, higher high, consolidates a little bit, keeps going higher. This actually becomes a swing high, right? And it's like, uh-oh. But then we hold a higher low, this low higher than this one. We get a reversal higher. And then we make another higher low, another higher low. This could become another higher low. Remember how we looked on that daily chart? This is your low for that daily candle, I believe, like right thereabouts. So that's your real level in the sand. Yet at the same time, the fact that we're making a new low below this 8-hour candle is not a good sign. We still have 4 hours before this closes. So this could end up reversing, building a nice wick, maybe even becoming a bullish green outside candle. Who knows? But if we close below this, that is a warning sign, right? But the real sort of uh-oh would be closing below this, because that tells you you're maybe getting a false breakout on the daily time frame. But so far, what we have here, again, higher high, higher low, higher high, higher low. We are in an emerging uptrend on the lower time frames. And on the daily time frame, it actually plays out too, right? Like we have this high, low. And so now we're kind of potentially setting a higher low. You could see something, like, so we did that. Maybe even something like that. Something kind of complex. So you could get, like, this area could get people kind of tripped up, because this is a lot of range here. So we could spend a little time inside this range for a few days. That might get people a little tripped up. Like this could look like a lower high or something like that. Who knows? We'll see. It could take many forms, obviously. But that's the key levels are very clear, right? Like we need to hold. Like you really don't want to see us go below this low, like that 1880 level, which is obviously a long way down from there. And so again, as I said, you can look at the lower time frames for clues. If we go to the hourly chart, let's see. So this is a good one on the hourly chart. So that swing high actually happened at noon. Interesting. And so since noon, we made a low and then we made a high. But what kind of high is this? This is a lower high. So that's your first warning sign. We now have a little downtrend emerging on the hourly chart. Yet on the 8-hour chart, if we can hold this low here, this will remain looking more like a bull flag, or it'll start to build out like a bull flag. CPI is obviously going to be the thing that's going to, there will definitely be trappy action immediately after the number, but that's what's going to allow us to make that sort of next move, which you would think would be higher, again, in that same direction as the market. but that's what we're going to have to see. And if we look at Dixie, which I think is an important clue here, we are moving into a daily cycle low. So this is actually day 23. So Dixie starts to trade at 8 o'clock. So we've been trading for almost 2 hours now. So far, it's just an inside day. The low to break that would be below, let's see here, 107.81. And so that's the level that you want to look for. The swing high itself is active below 109.517. So we're already down, a full buck, more than a full buck from that swing high. And it's day 23 now. The last daily cycle bottomed on day 31. The one before that, day 20. Before that, 43, 38. So it's kind of all over the place. And more importantly, what does this mean for the weekly cycle, right? So that was week 14 last week. And we do now have a weekly swing high in place, right? Like the same way we have a daily swing high in place to form a daily cycle high, we now potentially do have a weekly swing high in place below 108.36. So that's your important level. Can we recapture that level? Can we start to get back into that range? Because there's obviously a lot of week left to trade, and this is going to be moved pretty massively by the CPI print, I suspect. And the same deal for this one, right? Like if you think about it, if you think about the Fed meeting, that's going to be really important, right? And so the Fed meeting on the 21st, right? That would be day 29 of this daily cycle. So you could see, that's interesting. Right. Yeah, that's it. Right. Like you could see daily cycle high for precious metals and the market, and a daily cycle low for Dixie. And the question will be, is that also a weekly cycle low? And are we going to start, a pretty big move out of that? So that's going to be really interesting. And of course, that's just speculation, but we know that's going to be an important date because they're going to either hike by 75 bips or they're not. That's what the market is expecting. There's a lot of expectation kind of built into that. And of course, how hawkish does he sound during the speech, etc. So that's the lay of the land. Definitely promising price action from silver. Don't like the look of gold, to be honest. But silver can be played. There's a clear uptrend in place. And what we want to see is, again, get excited about this pullback. Can we hold this higher low? The way right now we're not collapsing, notice we're building that little lower wick. That's a good sign. We're not just dropping. We're not just dropping from the sky. We know we needed a pullback. You can't just get these kinds of moves and not digest them. So now we just need to hold those higher lows. Right. So this is your 8-hour candle. This is what I was talking about. We're below that low, but now we're building a wick. Doesn't mean we have to turn into a bullish green outside candle by any means. But just not continuing the collapse is important. And if we look at the hourly chart, yeah. So building a nice little wick here. This is becoming kind of a double bottom. So we're going to have to see. Definitely looks promising for the short term at the very least. But, tomorrow is going to be really important to see if we get that follow through or a bearish reversal.